We welcome Andre Perry. He's the author of a book called Know Your Price, Valuing Black Lives and Property in America's Black Cities. Andre is a fellow at the Brookings Institute. Andre, welcome. Good to have you with us. Maybe I'm the only person in the country who did not know this. I did not know, and I am surprised that lenders are allowed to ask your race as part of the application process. Why are they allowed to?
Well, one, we do need to have that information to know if we're actually lending to Black, brown, and indigenous folks. So there is a data collection need, but unfortunately, we still see that data being used to punish Black buyers and sellers in many cases. And so, yeah, we want to see a sort of a colorblind approach, but we also know that if we don't collect the data, we won't have the information to remedy the situation.
But let me push a little bit here, and I'm just thinking off the top of my head. Why couldn't you collect that information after the mortgage application has either been approved or declined, so that it isn't known up front and therefore can't get into in any way the decision-making process?
Yeah, I mean, that is certainly possible, but you still want a lot of information because there's a lot of things that occur in the front end that you want to address. And because many people fall out of the process. And so, but I agree with you, we need a better process overall to eliminate the bias. But again, it's hard to eliminate bias, even in the cases of more AI or technological applications, bias in, bias out. So if you have programmers who share the same kind of biases as current lenders, you're going to see the same kind of dynamics. So in some respects, it doesn't matter if you're asking a question or not. There are so many ways to get a glimpse of a person's rate in the application process that shows up.
Let me ask a question again, because I'm curious and I'm ignorant on this. Is the fact that Black applicants are rejected more than white applicants, is it solely because of bias, or is it also because of data? In other words, that the data that is input creates an output that says this individual, either because of income, length of other indebtedness, length of time at a job, or their race, if they disclose it, is less likely to be able to pay the loan. Walk me through that so that I have a better understanding of whether it is bias or data or a little bit of both.
It's a little bit of both, and I'll give you just a brief history lesson. A lot of us know that the Homeowners Loan Corporation, the federally backed Homeowners Loan Corporation in the 30s, redlined Black neighborhoods and not allowing them to refinance loans and get low interest loans to develop communities to then pass on that wealth. And so many Black Americans simply do not have wealth. And when you do not have wealth, you take on more debt. So there is that issue. But we should have policies that address that very fact, that we know that policy violence leveled against Black, brown, and indigenous folks occurred. And we need new mortgage products to do that. But I also just want to be clear that there is racial discrimination in the market. We control for a lot of the buyer's qualifications. And just like the person in your segment, we see when Black people have everything required for a great loan, and they still get worse interest rates. They still are denied. And that's out because of plain racism.
Yeah. I want to continue this conversation, Andre. It's been great having you. One of the things I was stunned earlier this year in my reading was to find that the average net worth of whites in America is something like $190,000, and the average net worth of African-American families is something like $18,000. It's stunning, the disparity of wealth. Thank you very much, Andre.